Thank you for joining us this afternoon. We have PureGold Mining presenting. With me today, I have Darin Labrenz, CEO, and Graeme Currie, Chairman. Before we get started, a couple things. There will be a Q&A at the end of the session, so feel free to put your Q&A in the box at the bottom of the screen throughout the presentation, and we'll address those questions at the end. And this presentation will contain forward-looking statements, so I encourage you to check the company's disclosure on their website in the presentation. I believe the presentation is also on the website, but they'll go through it with you today. So without further ado, I'd like to introduce Darin Labrenz, CEO of PureGold Mining. They're developing a high-grade gold mine in the Red Lake district of Canada, and he's going to talk all about that exciting project. So Darin, thanks for joining us today.
Thanks, Deborah. Great to be here.
Nice to have you. Well, with that, I'll let you load up the presentation and walk us through Canada's next gold mine.
We're happy to be here today to talk about Canada's next gold mine located in Red Lake, Ontario. And, you know, it's a great time to be building a mine in Canada. And there's a number of themes that Graeme and I will touch on in this presentation, and I'll kind of run through them: location, grade, size, and growth potential. You know, clearly in Canada, we're well-established regulatory environment, and there's no better place than Red Lake with a near 100-year mining history. But we're also looking at today a market dynamic that's looking really strong and constructive for gold, with you know, declining real interest rates, increasing government debt. We've got central banks have been buying, so you know, strong rising gold market coupled with a you know, weak Canadian dollar means that I think we're perfectly timed for production with first ore delivery over to the mill in December timeframe. So we're going to get to that in a minute, and we'll get to some of the numbers. But one of the things we want to do here is kind of set up the big picture in terms of where we're situated and where we see this company going and how it's going to grow. Maybe I'll throw it to you, Graeme, for a few kind of opening remarks.
Thank you, Darin, and thank you everyone for listening in. Good morning or good afternoon, depending on whether you're Eastern or Pacific time zone. This slide really encapsulates what we're about. The province of Ontario in Canada, we're talking about one of the safest, most mine-friendly jurisdictions in the world. Red Lake itself, as Darin has indicated, has a near 100-year mining history as a high-grade gold camp. Our asset, the PureGold Red Lake mine, is scheduled to come into production at the end of this year. We're in the middle of construction currently. And we've got a lot of things that we think are key components to a growing company. We have a high-grade gold deposit that is not limited. We have not defined its outer boundaries. In fact, we've got indications of substantial extension, at least to depth and strike, on numerous zones. And Darin will provide you some more comment towards the latter half of this slide presentation. We're in Canada, so what does that mean? In terms of gold price, we certainly get advantage of the rising gold price, but we also get an advantage of a declining Canadian dollar. When we did our original feasibility study, we did that at $12.75 gold US dollars and a 1.33 exchange rate. Clearly substantial differences in today's environment, where gold is well north of 1,700 and our C dollar is around 1.4. The other thing I want to highlight is the team. What's really important with the PureGold team is our experience in Red Lake. Individuals such as Darin, Maurice Belanger, who is on our board of directors, Phil Smerchansky, our VPX, many others on our management team and our board cut their teeth in Red Lake and have spent years working there, understand the geology, and understand the Red Lake complex, which is really important in terms of the exploration upside and the development potential beyond what we have established to date. We think that this is a wonderful high-grade asset. It's amongst the highest grades in Canada and certainly the world, and Darin will touch on that in a moment. And we believe that this phase one program of turning this asset into an operating mine is just step one for PureGold. And with that, I'll turn it back to Darin.
Thanks, Graeme. As Deborah highlighted, we will be making some forward-looking statements. So it all began 2.7 billion years ago, and the Earth was an interesting place at that time. Not that I remember it. It was a very active period, and it formed a style of deposit that we see around the world. And this style of deposit is located in Red Lake, and it shares many attributes with the class. Volumetrically, they can be quite small, but they pack a huge punch. They're typically very high grade, very deep rooted, and they generate long life mines that go on for years and often very high margins. In the background here, we're looking at the Red Lake Mine Complex, now owned by Evolution. They bought it from Newmont earlier this year. And that's an asset that's been in production continuously since 1945. Collectively, there's been over 30 million ounces of high-grade gold that's come out of the Red Lake camp. So we want to spend a moment to just kind of set up Red Lake and what does it mean to be in Red Lake? And so this is a simplified geological map on the screen here that we won't go into any great detail on, but I do want to highlight a couple different characteristics on here. One, the green. So the green rocks are where you want to be. It's the right chemistry, and to date, all of the 30 million ounces of known production out of the Red Lake camp have come out of those green packages of rocks. You also want to be on one of these contacts between the yellow and green. It's defined here by a gray squiggly line. Those are deep structures, if you will. They're the plumbing system. So effectively, you think about it as plumbing the large deposits that are grown. It's a crack in the earth. The fluids come up. They form deposits. And so you can see a clustering of red stars that kind of lie along that contact within the green rocks. And those define two trends. And the two trends are effectively the same. They're geometrically oriented a little bit differently, but they're the same kind of scale. The north trend is owned by Evolution and includes the Red Lake Mine Complex, and the southern trend is owned entirely by us, and that's where we have our own PureGold Mining Complex. So that kind of sets up the framework here. What we're doing now is we're showing the same thing, but in a cutaway block diagram. So we've got the PureGold trend on the left, we've got the Evolution Red Lake Mine Complex on the right, and what you can see here is reflects again many similarities. As highlighted, they're in the same rocks. The timing mineralization is the same. They're hosted by the same types of structures. They're virtually identical in every respect. And in fact, when you look at them, they share the same scale as well. So we're looking at similar scales on the left and right between the PureGold Mine and the Red Lake Mine Complex. The one difference here is that the Red Lake Mine Complex is mining down to a depth of 2.5 kilometers versus our own, where we have resources and reserves that are defined down to a depth of just over 1 kilometer. So we're effectively half done when compared to our neighbors to the right. I think if you were to, kind of wind back the clocks and step back 30 years, the Red Lake Mine Complex would look identical to what we have today. So we really feel that we're really only halfway developed. I think the other kind of key thing that I want to highlight here is this, if you can see it on the screen, I'm moving my cursor on the deepest part of the Red Lake Mine Complex. That's the high-grade zone. The high-grade zone was discovered in the late 1990s, and really it was a company builder. That's what built Goldcorp. It transformed it into its peak, a $45 billion company, and it really was driven by that high-grade discovery. And that kind of opportunity for transformative growth is something that kind of is, again, a recurring theme in this style of deposit. On our own property, we have the 8 zone. The 8 zone sits at about 1 kilometer below surface. It's our ultra high grade zone. It runs 2 to 3 times the grade of the overall reserves, which are already amongst the highest in the world. And it's an area that we're really quite excited about getting underground, continue to develop, to expand and grow. So what does it look like when we zoom into the property? Well, I think the one thing that's striking right here is the incredible scale. And so what we've done here is we've color-coded the mineral system, we've projected the surface, and we've divided it more or less by kind of phase of growth. The red is our phase 1 mine plan. It hosts our mineral reserves. And so let's stop and talk about that for a moment. We have right now an area, a project, I guess, that's produced 2.5 million ounces historically. We've got 2.1 million ounces of indicated resource of 9 grams per ton. We have another 500,000 ounces of inferred at around the same grade. And so effectively what we're looking at here is already a 5 million ounce system. And again, we've only defined it down to 1 kilometer depth. When we look in plan view here, the pink are new discoveries that the team has made over the last several years. And I really have to take my hat off to the work that the team has done in unlocking the geology and unveiling the true scale of this deposit. Fork, Wedge, Russet South, they've got various names on here. Really, that's just a means of geo-referencing ourselves as geologists and explorers and miners. But they're all part of the same mineral system. From the bottom left corner to the top right, we're looking at a scale of about 7 kilometers. So again, incredible strike length to this mineral system. And just want to highlight some of the high grades. I talked about the 8th zone as being, you know, our high grade zone. And we've got some callouts on the screen here that you can read, but you know, the 8th zone, 4.3 meters at 466 grams per ton, 5.5 meters at 342 grams per ton, 8.2 meters at 120 grams per ton. You can see the phenomenal grade that we see within the 8th zone, and get a sense of why we're really excited about getting underground and looking to expand that zone. Wedge, Fork, Russet South zones, nothing to seize at. Again, very high grades, new discoveries sitting right at surface and open for expansion.
Darin, maybe I could speak to one other thing that is really important about PureGold and our assets, and that is, you can see on the on this map, you can see a highway, and that highway comes into our ground and actually comes within about 100 meters of our mill complex that is under construction currently. That mill complex decline and shaft access to underground are part of the phase 1 construction program underway. And as Darin has indicated, the extreme high grades of not only the 8th zone, but our new discoveries are key components in what we believe will drive expansion beyond the resources and reserves we have outlined to date.
Thanks, Graeme. I think the other thing I'd like to highlight on this is, you know, 1.3 million meters of drilling has gone into defining this resource, which is an incredible number. You know, in my career thus far, I've yet to experience that kind of drilling to define an asset. Within the phase 1 mine plan, we have an average spacing between drill holes of 6.5 meters, and so that goes a long way to addressing key risks in this style deposit, and that are, you know, what is the grade and where is it located? With that kind of definition, with that quantum of drilling, we have real strong degree of confidence in terms of the overall resource grade and location. So what does that 1.3 million meters look like? Well, I'm going to show a long section next. So it's going to be a cutaway showing from the left side, our wedge zone, all the way up through the main part of the deposit to give you a sense of what that drilling looks like. And so here it is. On the screen, we're looking at every intercept on the property across that long section. Every one of those magenta colored dots is a high-grade intercept that runs 10 grams per ton or above. There's 13,700 high-grade intercepts across that long section. And one of the things is really striking here is the amount of white space. If we look at the main part of the deposit, that thick plunging zone that runs in the center of this image, we've defined reserves down to about just over a kilometer. Highlighted at the base of reserves as an assay, 34.6 grams per ton over 4.3 meters. We've intersected it down to 2.1 kilometers. And so virtually white space in between. If you look at the kind of the endowment or tenure of this gold system, you know, in the top kilometer, we're looking at about 3,500 ounces per vertical meter, which means that in that next kilometer down plunge, we could be adding 3 to 5 million ounces. And certainly with that deep pierce point that hit deposit with the same rocks, same alteration, same gold grade, we have a high degree of confidence of the ability to continue to expand this deposit down plunge. Stepping to the left, we have the 8th zone. I talked about that as being our high grade zone. You can see how it sits there again in a sea of white space. It's completely open down plunge and has yet to be tested. Up plunge, we did something very simple, you know, early on when we acquired the project, and that was to point it up dip and test at surface where we intersected our Russet South resource. Recently, last year, we put a hole into the gap about midway between the surface expression at Russet South and the 8th zone at depth, and we hit, you know, 1 to 2 meter high grade intercept right where we expected to see it, giving us good confidence of the potential of that structure to continue to push upwards. So again, a lot of white space and optimism in terms of the ability to expand the 8th zone. Moving left from there, you can see Fork and Wedge sitting right at surface. Again, they're wide open with the potential to develop another, you know, series of plunging chutes there. And some of the grades are called out here. Again, you know, very high grade right at surface. Across to the left, you know, north of the main deposit, some high grades along the structural trend and really virtually, you know, very limited exploration activity across that. So kind of to draw what we're thinking, this is just showing the strength of the system in place here. Again, with the main chute plunging off to the right, wide open to depth. And bear in mind, our neighbors at the Red Lake Mine Complex are mining today at 2.5 kilometer depth. So more than half of what, or double what we've defined our resources and reserves down to. Our high grade zone sitting here in empty white space with the ability to push it not only down plunge, but back up towards surface. And the potential for a new southward plunging chute to develop in the Fork and Wedge area. So again, incredible scale on here, high grade, and really I think this shows the size and growth potential that are apparent to us looking at the property.
Again, just to reiterate, I think Darin, you touched on it already, but we're dealing with a structure where we've got mineralization along roughly 10 kilometers of a system. Now, at this point, clearly with the number of white spaces, particularly to the north, that need to be infilled, there's a lot of work still to be done. But as Darin has indicated, system is more than sizable. And as he said at the very beginning of this presentation, this is a high-grade deposit. And in a very small space, it can pack a lot of punch in terms of ounces contained.
So step into the numbers now, and you know, I'll get to this in a moment. You know, just to reiterate, we took very much a phased approach to, you know, what is a scalable asset here. We saw an opportunity in a brownfield site with existing infrastructure to move very quickly to production, and so we carved out a 1 million ounce reserve out of the broader 2.1 million ounces indicated and 500,000 ounces inferred, and completed a feasibility about this time last year. We went through a number of milestones on the way to production. We signed a First Nations agreement in July with our partners, Laxo and Wabascang. We followed it up with you know, an equity and debt project financing package to fully fund this through to production. We initiated construction late last year. Our pre-production development started in December, which is about 5 months ahead of plan. And to date, we're achieving about 60% better productivity underground than we had planned for in the feasibility study. And both of those combined have the potential to really impact the overall project. By opening up the mine faster, we're able to look at all the mining areas that we have available to us and prioritize based on grade. So in other words, trying to push the grade forward. Secondly, we're driving deeper faster, which means that we can hit the 8th zone and the high grade attached to it for both exploration and growth perspective, and also from a production standpoint earlier than we'd originally planned in the feasibility study. But even out of date, these numbers, which are the top end of our sensitivity table in the feasibility study, priced at $1,500 US per ounce and an exchange rate of 1.33, which translates to 2,000 Canadian dollars an ounce. The numbers look pretty good for a first phase. 51% internal rate of return, after-tax free cash flow of nearly 600 million, an after-tax net present value of nearly 400 million, and an all-in sustaining cost of sub 800, which means that today we're showing a margin of about 900 US dollars per ounce, or about 1250 to 1300 Canadian on a per ounce basis. And what's driving this is grade. At 9 grams per ton, we will be the 5th highest grade mine in Canada and the 17th highest grade mine in the world, which makes us, you know, really up there at about 95th percentile worldwide by deposit and by gold grade. Again, relating back to the Canadian dollar gold price, this is $2,000 Canadian dollars an ounce. Today we're at 24 or 24.50 on Friday, and so we're already $400 an ounce above these numbers. And with the first phase of our mine delivering a 1 million ounce reserve, that adds $400 million in cash flow to the base case.
And key here is sort of the last comment there, which is implying we're extracting the low-hanging fruit. We cannot emphasize enough, this is phase 1 of our mine plan. And we are ramping down as we speak today. And by the end of this year, we'll be pouring our first gold. This is the near surface material. And as you've seen in the information in the previous slides, we have a lot of work still to do in the upper 1.2 kilometers of this body, but clearly it remains wide open along strike and to depth. And if we can't emphasize enough the expansion opportunities that we're excited about and that we believe exist on this asset, hopefully by reiterating it several times, you'll catch our enthusiasm for that.
Thank you. So What does it look like on an annualized basis? Again, I would suggest this is out of date already. What we're showing is cash flow on a year-by-year basis from the phase 1 mine plan feasibility study. And the bars are color-coded by metal price. So the red is the base case. That was $12.75 US dollars an ounce, or 1,700 Canadian. You add on the pink, that takes us to 1,500 US dollars per ounce, or 2,000 Canadian. And the gray is today. And so you can see the real strong leveraging the gold price with, effectively doubling cash flow from the base case in a year-over-year period. I talked about the early start on pre-production development and the productivity improvements that we're seeing underground thus far, and that has the effect of, again, providing more material available to make selection from, being able to optimize your stoping sequence and optimize on grade. And the net effect of that is to push the cash flow to the left. And so the idea here is to try and steepen that curve upwards, where in year 5, 6 here, you're seeing the effects of the 8 zone, which runs 20 grams per ton. We're driving strong cash flow in that period with the productivity we're seeing underground today. And if we were able to extrapolate that over a period, we think we could potentially bring that as early as year 3. So really squashing this towards the left side. The other kind of key point to make here, and it reflects what Graeme just reiterated, and that is the strong growth profile that we see in front of us. We're already looking at the near surface discoveries. We've got resources built there. We've done some early level scoping work to look at how they might be mined, what kind of capital they require. We've thought about how we might expand the plant, and all of that is the goal of pushing this whole profile upwards. In other words, layering on that second phase of growth on top of the first phase to drive improved production profile and improved cash flow. And longer term, just to highlight this downtrend you see in the cash flow and production profile, that's an artifact of drilling. And if you look around the world at underground deposits and you think about how you drill them effectively to add resources and reserves, you do it as you're in production, as you move downwards, because that's the most cost-effective way to do it. And so where we see this decline is exactly when we're in the 8 zone. We're targeting up and down plunge. We're growing resources in that area, and we're starting to really drill off the broader main deposit down towards that 2.1 kilometer hit that we have in our database today. And so we see an opportunity here with our second phase to push the profile upwards, and then with a third phase continuing to drill across that 7 kilometer strike length, or 10 kilometer, if we incorporate the northern extensions, an opportunity to flatten out that curve for a long life, multi-generational mine. So a bit of a coy play on words here. Turns out when they abandon these mines, they barely scratch the surface, and that really reflects how we feel. We're just scratching the surface right now with the work that we've done. We've got a phased approach to development. We're in construction today with first ore delivery to the mill plant for Q4 this year. We're already built resources in the second phase, and we're thinking about the third phase. I think the other play here is, when you look at value generation or creation in our industry over the last decade, where does it come from? And in many cases, it's come from brownfield assets that have reinvented themselves through discovery and growth. The closest example to us is the high grade zone of the Red Lake mine, which was the birth of Goldcorp. More recently, we've seen companies like Kirkland Lake Gold make deep discoveries at Fosterville, the Swan Zone, or Macassa, the SMC, that have grown that into a $16 billion company. And so we really think we're just scratching the surface, and that opportunity for transformative growth is very much apparent on our property.
And towards that end, some of you may be asking, well, if you're going to grow the resource, when does drilling begin? In our last news release, we indicated that by the end of this month, drilling will resume. And so this opportunity to expand and grow the resources is something that is immediately in front of us, and something that we're equally focused on, concurrent with the construction and build out of phase 1 for the PureGold Red Lake mine.
And it's that kind of growth that's driven our strong share registry. When you look on here, we've got 4 titans, if you will, 2 senior producing companies, number 1 and number 3 in the world, Newmont and AngloGold Ashanti, are shareholders, and also Rob McEwen and Eric Sprott. Rob, who was at the helm when the high-grade zone was discovered in the Red Lake and really launched Goldcorp from there, and Eric Sprott, who obviously has been at the helm at Kirkland Lake as it transformed itself through discovery at Macassa and Fosterville. Collectively, 30 to 35% are held by these 4 entities or people, and we're really quite excited to have them as strong supportive shareholders.
Agreed. And PureGold's been around for just over 5 years. And we're pleased to thank and are very appreciative of having Rob and Anglo Gold there right from day one, and having Newmont Gold Corp and Eric Sprott as significant shareholders is certainly something that helps confirm in our minds what we believe is the upside potential for this asset.
So I'd like to thank you on behalf of Graeme and myself for this quick introduction to PureGold. And just to reiterate, it's it's a phased approach here to a scalable asset. We've got a very robust phase one that will be on schedule, on plan, pouring gold before Christmas. But we're already thinking about steps 2 and 3, and really excited about continuing to grow the project through discovery and expansion of the zones that we've already discovered.
Deborah, we'll turn it back to you for questions.
Thank you very much. I think that was a really good overview. Just to remind attendees, you can put questions into the Q&A or you can email them to me. So I do have a few questions. Just given where you left off, I think that this one makes sense to start with. So when do you expect to make the expansion decision and convey the economics to the market?
Yeah, I'll answer that one. So we're really excited about the next phase. We've drilled off resources in those areas already. We're continuing to drill to grow them. They are open for expansion and to convert inferred to indicated. We've done some early stage scoping level work on those discoveries, and we'll continue to work both from an exploration aspect to grow them, but also on an engineering aspect with the goal here to show that kind of growth and expansion as quickly as possible. So we're very much fast tracking the work from both an exploration perspective and an engineering perspective to understand exactly what that will do for us. It is clearly very, very accretive given the infrastructure that we have in place, and we're excited to convey that to the market.
I think that there is some misperception in the market about underground mining and how you expand your resources. And I think that's going to continuously be an education for you to have to educate the market on that. But I think the plan makes total logical sense. And I have another question coming in. Actually, the following 2 questions both deal with M&A and your strategy around that. So, is the company open to a merger or acquisition? And what is the long-term plan of the company? Or is the goal to grow the company to a multi-billion-dollar one?
Yeah, I think we're very focused on executing right now. We're building a mine. We're building a mining company. We've got the first phase in front of us that we're midway through construction with near-term visibility to cash flow. We've got a very strong organic profile in front of us with respect to the discoveries we've made, and more broadly speaking, to a 10-kilometer long system in place there that we think is wide open for expansion. So I think the near-term value here is going to be created through re-rating as we come into production, and then longer term really demonstrating to the market that growth profile that we clearly see. We're very focused on building a company organically and longer term, looking at opportunities outside of that. Clearly, from an M&A perspective, everything we like about the project is going to be well liked by the industry. Its location. There's no better place to be building a mine than Red Lake, Ontario. And particularly with the double bump we see in gold price and Canadian dollar right now, it's got a low cost, high margin kind of narrative around it. Secondly, the grade. Being 17th highest grade mine in the planet is a pretty strong position to be building from, and obviously with a real strong growth aspect that we see is key. I don't know if you want to add anything to that, Graeme?
The only other thing I want to add to that is PureGold's in the business of maximizing value for the company and for the company's shareholders, and certainly in our construction phase right now, we see that as the best step to maximize value. And we think that this brief presentation outlines where we want to go and how we're going to get through to our first pour in December of this year. And that's really the key, as Darin has indicated, is we're focused on getting this asset into production and scaling up beyond that. The M&A environment in the sector is something that can occur throughout both bull and bear cycles, but we need to be focused on what's best for the company.
So I guess the other question on M&A is, would you look at acquisitions? And if you did, at what point would you look at them and in what jurisdictions?
Yeah, I think, we're always looking. I mean, right now is our focus is absolutely on execution. I mean, that's number one. We've got a mine in front of us that we're constructing, and we need to execute. Secondly, we see real value in showing that, kind of the growth aspect. This phased approach to development here, I think, is going to generate the true value of the company moving forward. At the right time, we would look at, opportunities, and clearly if we're looking at opportunities, we'll stick to our knitting in terms of things that we understand, stable jurisdictions, that fashion, looking for all those aspects of why we like PureGold today. We want to maintain that kind of profile moving forward.
Yeah, absolutely, Darin. The board is 100% behind Darin and the senior management team in that regard. No question that we're focused on execution of our plan moving forward.
Do you think that you would be a takeout target in the next little while?
That's a tough question to answer. I mean, I'll just step back to what I said earlier, and that is, we love the location. It's a camp that's produced 30 million ounces. It builds companies. Our neighbors to the north have been in operation for eight decades, and it built a mining giant, if you will. And so we're really excited with the location. Grade, very high grade, can drive high margin in the right environment, and the growth aspects that we see right now, we're really excited about those. So, clearly, if we share all this excitement about where we're located, the nature of our deposit, and the growth profile in front of us, others are going to share that view.
I think it's really interesting, the experience that the team has in Red Lake. I know you talked about that earlier on in the presentation, but it might be worth touching on because we had some latecomers to the webinar.
I'd be happy to touch on that again. One of the true advantages beyond an extremely high-grade, well-endowed asset in a very safe jurisdiction is the team, and the team has substantial experience on the ground or sciencing in Red Lake. And that includes Darin Labrenz, our president, who cut his teeth in the Red Lake mine as ultimately as underground chief geo, Phil Smerchansky, our VPX, Chris Lee, on the board level, Maurice Belanger, Mark O'Day, and Rob Pease have all either scienced this camp or worked for companies operating in the camp. And that's really imperative in terms of the skill set, because we get Red Lake, and we think we've demonstrated that already to the market in expanding resources, one, and two, doing so not only within the main PureGold Red Lake complex, but also in the discoveries at Russet, Fork, and Wedge.
What are your relations like in the community in Red Lake?
Yeah, they're really good. I mean, it's a pleasure to work in the Red Lake area, and as Graeme indicated, I was chief geologist at the Camel Mine in the mid 1990s. My daughter was born there, so it's a bit of a homecoming for many of us within PureGold. It's a mining community. Really, Red Lake was established on the premise of gold mining. There's been dozens of mines that have been built in the area, 30 million ounces of gold production, and so there's a real excitement right now about what's happening at Red Lake. We're building a brand new company, and that's created a bit of buzz in town, which is exciting for all of us. Strong support for moving forward. We've been having a long dialogue with our partners, Lapswell and Wabasang, and they're supportive, working alongside us. So I think we've got a real momentum and groundswell here in terms of doing something special in Red Lake.
And I'm sure you're sick of talking about COVID, but I have a couple questions on that. So have you adjusted your plans in light of the COVID situation? What about the medium term for the next 2 years? And has this encouraged you to look at automation and electrification, such as Casa Berardi and Borden?
Yeah, so obviously, this has been a development that's been quite fluid, and we've been monitoring very closely from the start of the year. We've implemented some pretty strong safety policies and procedures at site to protect the safety of our workforce and our contractors, including physical distancing, remote working where possible, meetings by telephone or other mechanisms such as we're doing right now. I think mining is pretty well placed to manage a lot of those kinds of policies and procedures. Working underground can be an interesting environment from a COVID-19 perspective, but we're driving through a portal in a ramp. It's a fairly individual activity, if you will, and there's already a lot of physical distancing that's inherent in the type of work that we're doing. So that's good. Red Lake has no active cases today, and in fact, when you look at Northwest Ontario, there's no active cases, and so it's a pretty isolated kind of region that's been able to shield itself from the broader impacts of COVID-19, and it helps us as well in the sense that our employees work and live in Red Lake. Our contractors are coming from Northwest Ontario. There's that strong mining history, if you will, and heritage in the region that really makes it easier to cope with the evolving situation.
And what's your degree of confidence that you will have first pour in December this year?
Yeah, I've got a high degree of confidence. I mean, we've gone through, we've placed 80% of our orders from a log and lead perspective. We're 95% complete on engineering for the processing plant. We're about 5 months ahead of schedule on underground development. Surface works are right on schedule, right on plan, and so I feel confident and comfortable with the timeline. Obviously, we're monitoring COVID-19 and impacts to the procurement schedule. If there's anything that could throw us off, it'd be that. But having said that, we're in daily contact with our vendors. 90+% of it's coming from North America. And so we've got a pretty good handle on where we're at and are seeing no delays at this time.
Deborah, if I may, just one more comment on COVID-19, because obviously front and center and will likely remain so for some time to come. One of the things to consider is that mining is off, and certainly mining and mineral exploration and development at PureGold is safety first, and it always has been. And that approach transcends through to how we've dealt with COVID-19. And as a company, we've done a number of things to make sure that we comply with social distancing and that we do everything to keep our staff and the Red Lake community safe. And that's imperative to understand. And as Darin has indicated, not only do we have no cases currently in Northwest Ontario, but the neighboring province of Manitoba has had, I don't know what the counts have been in the last couple of days, but I know 3 or 4 days ago they were down to 0 and they've had nominal counts. So we're fortunate in that regard, but equally we are extremely focused on making sure that we remain safe, both in the practice of underground development and mining, as well as dealing with COVID-19.
Well, I guess that's one of the benefits of being in the middle of nowhere. So I'm just going to read through some more questions if you give me 1 second. So I think you covered this, the ramp up in timeline from reaching full throughput for phase 1. I think that's mostly been answered. Do you have anything to add on that?
Yeah, it's a fairly quick ramp up from first ore to commercial production, given the simplicity of the deposit. We're intending, as we ramp up from an ore development perspective, to have a fairly healthy stockpile on surface when we turn the mill on, and that should aid us to moving into commercial production fairly quickly in the new year.
Well, I think having that cash flow and being in commercial production is going to be great because you have cash flow, but it also acts as a stock catalyst, having that re-rating, which I think will benefit you greatly. Which brings me to another question, which is the stock's performed really well over the last month or so, but you were somewhat underfollowed and probably cheap versus peers leading up to this, and the whole peer group's moved up probably in at the same level. So do you want to speak a little bit to your valuation, why you think that you are undervalued, and the ways that you're going to go about trying to close that valuation gap?
Yeah, I can start to, we've been frustrated by our share price over the years, being fairly range bound. We've had our heads down. We've been working on first understanding the deposit and then successful, discovery after discovery, moving through all the milestones one after another, and really haven't seen a response that we would would have liked to have seen in the share price. And maybe that's partially because we've been so focused on hitting those milestones. We haven't been as focused about making people aware of where we're at and where the growth is coming from. And so we're certainly, as we come into this period where you typically see re-rating in names moving from exploration through development and into production, we're also out talking to people and really growing the awareness of PureGold and the strong path we see in front of us.
And part of that too, Deborah, of course, is the messaging and the timing. And the timing, having gold prices moving as they are, having the Canadian dollar declining as it has been, we're dealing with a $2,400 Canadian gold price. And I think as people become more and more familiar with our story, the timeline to production, I should actually say the very short timeline to production, and the high margin opportunities, along with the phasing up and the exploration development upside that still persists on this asset, I think is finally getting some traction. And as Darin has said, we have been frustrated by our price performance. And again, I think he's right. It's because we have been heads down, focused on growing the resource, getting through feasibility, and now building the asset. But we are doing a lot more, we believe, to bring this asset and bring this company front of mind to those interested in the gold mining sector.
Yeah, well, the stock's been range bound since maybe 3-4 years, but you've broken out of that range over the past week. I know working with you over the past month and creating awareness for the story, it was one of the obstacles that I came up against, people just asking what the company has really done over the last few years to create value. And I think you've done a lot, and now you're kind of being more active in informing the market of the catalyst that you've achieved. And I think, having worked in the capital markets for 15 years, I prefer working with companies that go out and do something and then talk about it rather than the reverse. So I think it's a perfect time for you guys to be marketing, talking about the story and your achievements. So congratulations. It's quite a thing to be building a mine. And going back to the currency that you talked about, I think that is a really big benefit being in Canada. Not only are you in a stable jurisdiction, you get that currency benefit right now, which I think is really favorable, particularly because there's a lot of rhetoric, at least from people in the markets, maybe not so much from the mining companies, about potential nationalizations of assets coming out of COVID. So I think being in Canada is a huge benefit. I don't know if you want to add anything to my diatribe.
The one thing I'd like to add is the community. We're fortunate to be in Canada. We're fortunate we've got access to capital, and the Canadian dollar has certainly helped. But being in Red Lake has also been exceedingly helpful. This is a mining community. It understands gold mining. It understands high-grade gold mining, and it along with our management is a hidden asset to this company.
And I'm sure having the vast experience there and deep roots just helps with your position in the community.
No question.
Okay, so I've got one last question in the Q&A. So is the company going to benefit significantly from low oil prices in Q2, Q3, and beyond? Would it be wise to consider the effect in the near-term costs?
Yeah, so, as an underground mine, oil prices are a lower component of our cost base than say, in an open pit mining environment. I think there's, in terms of the actual mining cost, I think fuel is about 5 to 8%. So it's a relatively minor component. Certainly we'll see a benefit from the current, pricing with respect to fuels and we'll see pricing benefits for underground heating as well, which is driven by fuel. But I think the larger impacts are going to be from the actual price of gold in Canadian dollar terms and the margins that generates, given the way we've seen it move.
Well, I think that's it for Q&A. So just to summarize, I don't know if you want to summarize, Darin, or if you want me to. Your choice.
I'll give you mine first. How about that?
Okay, yeah, perfect.
So we're, again, I can't say it enough. We're really excited. We're got a fantastic location here, Red Lake, Ontario. I think there's no better time to be building a mine. We feel like we've perfectly timed this first phase of production with a rising constructive gold market and a stable or declining Canadian dollar. It really is the best of both worlds. So I expect as we move into first ore delivery to the mill and gold pour in Q4 timeframe that we'll continue to see a appreciation of our story and share price as we move into that. But I really want to, I guess, reiterate to all the listeners in today that this isn't about that first phase. This really is about having a key piece of the quintessential fertile Red Lake geology, the size of the mineral system that we see today, the discoveries that we've made, and the ability to continue to demonstrate growth at surface within our new discoveries and then longer term down dip where there's the potential for company building discoveries. So great time to be building a mine, strong cash flow to come out next year, but more importantly, a very, very well-defined growth platform for building a company.
Thank you. That's perfect. You almost left me nothing, Darin. Graeme, do you have anything to add?
The only other thing that I would add that Darin, I know, wouldn't talk about, and I've said it before in this call, is you cannot do what we have done in a very short time frame, within 5 years, the way we've grown the resources, made discoveries, delivered a feasibility, funded the feasibility, and we'll be pouring our first gold by the end of this year. That is breakneck speed in the mining industry, and you cannot do that without having the skill sets and strong management team that we have, as well as a strong and diverse and well-versed in both mining and the Red Lake Camp board. So that, as I've said before, is a core asset to this company. We're certainly dealing with a high-grade mine at the PureGold Red Lake complex, but the management team and the drive forward is something that we see as concurrent with the growth platform that we have at PureGold.
I couldn't agree more. So from my perspective as a value growth small cap investor, the things I always look for: strong management track record, which you clearly have both in the Red Lake area and in building and defining and then building mines. A favorable macro environment, which you have with the gold price, and in a favorable jurisdiction with a tier 1 asset. You've got scalability, you've got value, which I really like, a lot of growth, and you're fully funded to scale. So I think that's a real benefit and undervalued in my opinion. So there you go. And near-term catalysts, what's not to like? So thank you both very much for allowing yourselves to be tortured by me once again. And it's been a real pleasure. And thank you to the audience for participating. And I'm really excited for Canada's next gold mine. So thank you all.